Deanne, Stewart, thanks so much for joining us.
Thanks, Leo.
Now, since Australians have been able to access their super, figures from the ATO tell us that $3.8 billion has already gone out of super funds in Australia. Do these figures surprise you? Were they more or less in line with your expectations?
Leo, they're fairly well in line with our expectations. Yes, we've seen about 470,000 at last count Australians accessing their super at about $8,000 that they're accessing.
Now, the average, as you said, is about $8,000. Does this show that Australians are actually pretty aware of the importance of their super? They're not going for that full amount on average anyway.
Yes, certainly a lot of the members that we've spoken to fall into two camps. One is those that are really facing financial hardship, and so this is really critical for them to be able to access their super, and super funds like First State Super are certainly working around the clock to make sure our members can access that. But then, exactly to your point, a lot of our members are saying, look, ultimately my superannuation is there for the long term. My superannuation is there for a comfortable retirement. I want to actually not access the super and make sure that it keeps that compound interest going. So it's really in those two categories.
What kind of withdrawals have you seen from your own funds, and what kind of people are those that are making that request?
Certainly from a First State Super perspective, we've seen the numbers relatively low at this point, I would say. But when we look at those that are accessing their super, they're typically either actually quite young, so in their 20s or 30s on average, and are really needing to access it to help from a financial hardship perspective.
Okay. I mean, some of the industry funds have been warning against people taking their super out, despite the fact you have to actually qualify. You have to be in pretty hard circumstances to actually be able to do this. Why shouldn't people be able to pull their money out, given it's their money after all?
The way we've been talking about it is, first of all, if you can, I would certainly encourage you, if you are facing financial hardship and are contemplating accessing super, is to actually seek advice. So you might be aware ASIC, the regulator, has actually temporarily changed the rules for advice where Australians can access advice either for free through their super fund or indeed through the advice network, and the fee is capped at $300. So I'd certainly start there. But the reason
sure, but if you're in financial dire straits, I mean, paying for financial advice is really the last of your concerns at this juncture. Paying $300 might be your rent for the week, quite literally, if you've lost your job.
And absolutely, and I think that's why I would stress you're actually through this period able to get free financial advice. So, for example, First State Super is offering free financial advice to our members through this period on early hardship, on early access. And the reason why I'm pointing this out is in terms of the criteria of people that can access their super. If you look at it, you're either being unemployed, made redundant through COVID-19, or are seeing a 20% drop in your income. Now, people that therefore meet that criteria are going to fall into one of two camps. One is they are in dire straits and really facing financial hardship, and it is important that they know that they can go straight to MyGov, access their money, and that the super fund will do their very best to make sure that gets into their hands as soon as possible. There is a second category of people, though, that might meet that criteria but aren't necessarily facing financial hardship and are wondering, well, is this the time to access my super? And it's that group that I would say the best thing to do is either seek advice or at least be very mindful of the different things and the impact that might have having access to your super.
What about the nature of that advice, Deanne? Is that going to be conflicted at all, however, given that obviously it's not in the interest of the super funds to have people withdraw money? There has been some concern about a fund effectively push polling its members, encouraging them not to, or discouraging them from withdrawing money. Does that concern you?
Look, I would say I think that's being blown out of the water, quite frankly. At the end of the day, the first and foremost rule of a super fund is to do things in the members' best interests. And I think about First State Super, giving advice needs to be in the members' best interest. We're a $100 billion fund. We're expecting at the top end, the early access will probably only come to about $1 billion. So $1 billion out of $100 billion. And so we want to know that our members are there to get the right help, guidance and advice, and make sure that, quite frankly, they're making an educated decision when determining whether to access this money or not. It's as simple as that.
What about your own valuations in your own funds, Deanne? Some funds have undertaken quite extensive re-evaluations, especially those with large property and commercial property exposure. Where do you stand on your own valuations?
Yes, so Leo, I think what you're referring to there is a number of funds have both listed assets, so assets like equities and bonds that are marked to market, obviously by the minute, and then we have a number of unlisted assets, so things like property and infrastructure, and private equity. So in that case, what we've done as a fund is we've actually gone asset by asset and actually looked at the valuation as best we possibly can in these scenarios and actually adjusted the pricing accordingly.
Yeah, where do you stand on those? What level of write-downs are you seeing at the moment?
Well, it really depends on the asset. So because we've literally done it bottom up, it depends on the asset. So we've had one asset, for example, that's been written down significantly over 15%, and then other assets that are more around the 7 to 8%. So it really depends on the underlying dynamics of the asset and how their revenue line or cash flow has been affected through this crisis.
Yeah, I'm interested as to whether you think this will put a dampener or entirely stop, I suppose, the debate around increasing the compulsory level of super to 12.5% in this country. Do you see that being put off for the time being or stopped entirely?
Look, I certainly hope not. If anything, through this crisis, I actually think it's shown the strength of superannuation and our superannuation system. We literally have one of the best superannuation systems in the world. But a lot of the analysis shows, particularly for Australians that might have part-time or have staggered careers, actually the superannuation rate at 9.5% isn't enough for a really good retirement. And so I think my view is that the strength of the system is shining through. So being able to be there for members through financial hardship and being able to access their super is certainly helpful. But then we've got the real role to play with having enabled Australians to access that, of making sure that they have a strong retirement and dignity in retirement. So my view is this should not stop that. And if anything, it actually shows the importance of that.
Deanne, Stewart, thank you so much for your time.